G'day everyone, welcome back to Pete's Investing. Today's May 31st, 2023. This is the NIKKEI Japanese market update. We've got a long signal on our weekly and it's broken into a neutral signal on the daily. That's because of this divergence that's happening with the price retracing back off this minor resistance. So looking at the daily in more detail, again, this minor resistance forming at 31.67. And we did have this major resistance at 29.39 that broke up a few days ago or a few weeks ago. So now it's retracing back off that resistance level, and we may see further declines because of this divergence happening, with a bearish divergence on the CCI versus a bullish divergence on the price chart. And these usually play out, and when they do, they work nicely. And they occasionally fail, so there's no guarantee, of course. And the way you would look at this and potentially trade it. Now, I don't prefer to trade it. I prefer to use it as a potential change of direction. And in this case, if you're going long on the Japanese market, or the Nikkei, you'd probably be wise to take your profits and get out until it starts rebounding to the upside again. But in terms of the way you would look at this and where it may end up landing in the short term, you take that divergence, that bullish divergence on the price chart, and you draw a channel between those highs, and you bring the channel down to the lowest bar. And you can see there that current bear candle is resting on that channel as well, where that previous wick was landing. And in terms of a potential short-term target, then you draw a Fibonacci. You can bring it back to any one of these key levels, but I would probably bring it back to this one here, to that high. And the initial target will be in that range there, and that happens to be the 23 to the 38% Fibonacci retracement. So that's 30.68, 36.68 and 30.049. And it may well likely, if not there, it may actually fall through there possibly and come down to the next level. And I'll draw a secondary target area between that range there. That sort of coincides with these two diagonal lines as well, so it could very well go through either one of those and land and bounce off one of those before taking further potential upsides. But at the moment, we look at our indicator down here, which is showing neutral. So again, the weekly is showing a bullish signal, but I would caution going long at this stage because of that divergence. And then more closely looking at the hourly chart, you can see here there was also a divergence back here, and that's actually played out quite nicely, hit our initial target, and it's made further upside. And now this is just from the daily trend line. I'll just ignore that. What I've also got here, if you're trading on the lower time frames using the weekly and a daily primary trends, again, only take long trades when the weekly and a daily are aligned. So you would have taken long trades during that period when the weekly was also long. At the moment, avoid going long or short because they're not matching. But theoretically, had you gone long throughout the whole period, and this on the hourly, this is a back test going long only. If I zoom out, you can see there were times when the price fell, and that was an impact on a drawdown on your profitability. And there was a couple there. There was 1, 2, 3, 4 drawdowns. These ones are a bit minor, and the rest were single contract entries. So this area is, we don't use stop losses. These is where we average down and add further contracts to our position. And the way to avoid staying in that long position there, you would make sure that, for example, that area there, that coincides with this area back here, and you would have probably, let me go back to, that starts there at August 22. So if we go back to August 22, that entry there, you may have just missed out. So it's a bit, you have to drill down to it, but you would have had a potential long position there and a potential long position there. So you may have been stuck in one contract there going against you, but you wouldn't have had the second and the third contract entered. So again, always trade in the direction of the weekly and daily trends primarily to gain the best benefit and a better probability of success. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page where we look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching and see you in a future video.